The market is bleeding after Trump just announced a 104% tariff on China. And China says it will fight to the end and resolutely opposes Trump's threat of escalating tariffs. China doesn't give a fuck. Futures are plummeting. The Dow is down 1.5%, the S&P down 1.8%, and small caps and tech stocks down 2%. It is looking like we are heading into another big red day tomorrow. Now, we do have one piece of good news. The FedWatch tool is pricing in a 56.4% chance of the Federal Reserve cutting rates on May 7th, the next FOMC meeting. This is very bullish news. If the Fed cuts rates, this could be what we needed to save the market from collapsing. Now, this number fluctuates, but it's the highest it has ever been. And we won't know until May 7th, but this, in my eyes, is bullish. The S&P 500 on the weekly time frame is approaching the 200-day moving average support level. As you can see, every single time that price approaches the 200-day moving average, it almost immediately bounces back up. Could this be the case now that we are approaching the 200-day moving average again? Not only on the S&P 500, but also on the Qs, which has an amazing track record of bouncing off of the 200-day moving average. We've never really managed to stay under the 200-day moving average. So my prediction is that the market is going to bleed a little bit more, sit around the 200-day moving averages, and then we're going to have a slow recovery back up as these tariffs get situated. However, the intraday price action is not looking good. I believe it is going to get worse before it gets better. Like I said, I anticipate that the market is going to continue to fall to the 200-day moving average. We could be looking at a 470 SPY. And there is nothing but bearish momentum currently. We had a low of the day of 488. If the SPY breaks below 488 tomorrow, we could be seeing 481, which is the next area of support. If we break under this 480 support, that is when I believe the next area for the market to drop is going to be 470 to 472. We're going to hover around this 200-day moving average for a bit, and then I will be a lot more bullish on the market pulling back up. But in the very, very short term, this is not looking good. So tomorrow, we are looking to buy put options. If SPY breaks or opens below its previous low of the day at 489, with a price target of 481.69. If the Qs break below its low of the day of 409.75, we will be looking for put options with a price target of 402. Here's another one I'm eyeing with massive downside potential. It's Apple. If Apple breaks below its low of the day, which is 169, then that means the next area of support for Apple is 163. I'm also going to be eyeing Microsoft for puts. Under 350. If Microsoft breaks under 350, we're looking for puts and a price target of 344.65, which is the next level of support. This is one I'm definitely going to be trading tomorrow. Nvidia, if it falls below 94.40, we could see it drop all the way down to 86.60. That's an 8% plummet. This one will be a massive trade. Now let's talk about some long-term stocks that I am dip buying currently. So if you are going to be dip buying, here is how to do it and how not to do it, okay? Here's what you don't do. You don't go all in and say, oh, I think the market's gonna bottom here. Let me just dump all my money into my favorite stocks and hope it goes back up. That is how you catch a falling knife. Instead, what you do is you compile a list of companies that you've been eyeing for a long time, and now they are finally at attractive levels. You enter with a starter position, which means you leave enough capital to add into the position and slowly scale into it as the market continues to fall, in case it does, because obviously nobody has a magic ball and nobody knows when the market is going to perfectly bottom and just go right back up. So for example, right here, I entered a position on AMD at $78. I know that AMD has support at around $73, $75. I know that there's a chance that AMD could continue falling to this support level and then maybe bounce back up. I know there's also a chance that the market could just continue plummeting, AMD could approach the support level, and keep falling further to its next support level, which is around $55. I will not be adding to AMD until it breaks under this next support zone. When it breaks under $70, I'm going to add a little bit more, and then when it approaches its next level of support at around $55, I'm going to add a lot more. I think AMD is very undervalued, and I think after all these tariffs are situated, it's going to shoot right back up to its all-time highs. Another stock I just entered a position in is PayPal, one of my favorite, most undervalued fintech stocks. It is currently sitting at a major support level. I entered in exactly at this price. I will be buying more if it continues to fall under $50. And my price target on this is exactly what it was before the tariffs crashed this stock. So we're looking at a $95 price target. A nice low risk, high reward swing trade setup. One stock I'm definitely holding on to as a hedge is Dollar General. I have a small position in Dollar General because it's a recession resistant stock. If we do head into a recession, stocks like Dollar Tree, Dollar General, Target, Walmart, they go up because that's a place where low income people shop. And it's sitting at a pretty attractive valuation right now, down 66% from its all-time highs, and it hasn't been performing that bad compared to the rest of the market. It's starting to trade above the 20-day moving average, and it's broken above its minor resistance zone. So I think Dollar General is going to have a lot of room to run. My target on this is going to be 125. And then finally, I'm buying the indexes. I'm putting a lot of money into the QQQ, and in my opinion, this is the safest way to buy the dip. I have a starter position here at 415, and I'm going to be adding more once it approaches the 200-day moving average under $400. Same with the SPY. I'm going to be adding a lot more to my SPY position at around 470. Like I said in the previous video, I'm confident that the world is going to figure everything out. The rest of the world needs America's consumers, and America needs the rest of the world's manufacturing and supplies. Everyone knows this. The world cannot go round without free trade, and I'm confident that we will figure something out. Not only that, whether you are pro or anti-Trump, we all know that Trump is an egomaniac. He cares a lot about his image and the legacy that he's going to leave behind. Trump will not allow himself to leave the office with a crashed economy. That is not the legacy he wants to leave behind. I have high doubts that Trump is just going to continue crashing the markets and not giving a shit. In fact, it's all he talks about is how the markets keep going down. So I'm sure he has a plan for us. That is why I'm going to continue dip buying. I'm going to continue averaging into my long-term positions, and I'm going to continue taking advantage of this market correction by shorting the intraday price action while simultaneously adding to my long-term positions. Thank you guys so much for watching. Please subscribe to the channel and like this video if you want more updates like this. Comment down below. Let me know what you think the markets are going to do, and I will see you guys in the next video.